What's up, everybody? I hope you all had a fantastic day. I'm for sure having a fantastic week. And in this video, I'm going to break down 3 different trades on the S&P 500, Apple, and Facebook that I've taken so far. I'm also going to break down some trades that we took in my Discord community, along with some good lessons and market context that we could apply for future trades. Be sure to stick around. I'd appreciate it if you could just take 2 seconds, drop a thumbs up on this video. And if you want a very good trading resource, I recommend you to follow my Instagram. I post daily trading recaps on here, along with very good trading tips and tricks. The link to this will be in the description below. You're definitely missing out if you aren't following it. Now, let's get right into the video. First trade I want to go over was on Monday on Facebook. Execution was perfect, the plan was perfect, and the trade felt very, very clean to put on. So we went over this in the webinar we do on Sunday nights. We were pretty bullish on this. I'll go over the technicals backing it. However, in the pre-market plan, we were watching it to build volume and momentum to the upside with the strong market. I'm watching for a break above 332 to play calls into 333 to 334. We also created demand around 329 and 326 that pullbacks into this level should get bought up. So that was from the pre-market plan. I post these every single day in the Discord. Now, where I got how buyers were strong was we had an all-time high. We approached it. We broke above it. However, sellers were responsive enough to not make price continue moving higher. So they felt like this was an unfair price. Then the market came back down, but sellers really didn't show strong effort as they did once we broke above the first all-time high around 331.72. Then we gapped down, buyers stepped in, and then the following day on June 3rd or June 4th, buyers stepped in and made it a strong move to the upside. So sellers really aren't responsive and buyers are holding this thing up. The fact that we were consolidating near the highs made me think that we are going to go test all-time highs again to see if sellers are responsive there. So here's the action on Monday. The first hour and 15 of the market open, we were extremely choppy and we bounced off of that demand zone pretty perfectly. I'll go to a 1-minute chart now. So we bounced off that demand zone pretty perfectly. However, due to the underlying market conditions, if you go back to Monday's action, NASDAQ was extremely choppy and the S&P 500 actually was selling off. So it's safe to say that Facebook was showing signs of relative strength. However, this happened in the first 5 minutes, and due to lacking momentum and volume, I did not take it long off demand. So now we have buyers priced in from the daily chart. We also have buyers priced in intraday. It's very important to look at the bigger picture. The market then proceeded to rally. We did reject the first all-time high test. The reason why it was previous all-time high was a key area of resistance was because this was the area that sellers were responsive the first test above it. We hit it, then the market sold off. Really was not a good long entry there. However, once we came in around 11 o'clock Eastern and broke above it and held above it is where I became interested in this. Now volume and momentum was starting to build, especially above that area. Then the market pulled back. It held that 332 area as support. And we also did my favorite scalping strategy that I teach for Invested Trade members. So we had a bunch of different confirmations, and the more confirmations we have, the better my trades are. And you all know the ones that work the best for me work out right away as soon as I put the trade on. So at 11:04, I got long the 332.5 calls at $3.98. My stop for this trade was below this low right here on a 1-minute. Also, if the market did pull back and we were responding around this area, I probably would have lowered it a little bit to the previous all-time high to see if we could get below it. So I was really risking about 50, 60 cents. And my target was the all-time high at 333.78, 334 area. So at 11:04, I got long. The next candle, nice strong move up. Volume is slowly starting to build. We slowly are building momentum in the market as well. And then boom, we get a quick strong push above 333, whole psychological number. Beautiful volume down here for continuation. Now at this point, I'm looking to get out of my position because this is an all-time high. And you all know me that I don't like buying when other people are buying. I don't like being in a position. In fact, I like to sell into strength when other people are buying because that's how I get a best bang for my buck. So I knew a lot of late longs would have been chasing above all-time highs. So at 11:08, as soon as I saw that next volume push was a little lower than the previous, I got out my full position at $4.90, a little less than $1 per contract. So if you're trading 10 contracts, you're making a quick $1,000 in about 4 minutes. Came into all-time high, and yes, we did rally after this. However, I knew a bunch of longs would have most likely got stopped out, especially if you're buying an all-time high break, a high a day break. So I wasn't interested in playing games with the market just because of how weak ES and NQ were. This could have broke all-time high and started selling off. I have to protect myself, and I'll never complain about profits. Eventually, by end of day, these things continue to run, continue to rally, and you could have squeezed out another maybe 100% off the trade. However, perfect execution, perfect plan, very quick 4-minute trade, and it worked out perfectly. Now on Tuesday, the S&P 500 pre-market plan. You all know this is my favorite instrument to trade. I trade SPY options off the futures chart. We are coming near all-time highs in pre-market. I personally was very, very bullish on this. We had responsive buyers overnight. We had demand at 4230, 4228. So we wanted pre-market lows to be defended. If we get below those lows and demand, the bullish thesis will be voided and the market will continue selling off until the next demand zone. We were watching for a breakout above all-time highs with volume, and we were also watching an all-time high break, just like Facebook on a daily chart, when sellers were responsive and bringing us down. So we had multiple different scenarios. I was feeling extremely bullish on it. However, sometimes the market will never go according to our plan, and we have to be able to bend and deviate a little bit while still managing risk. So the S&P 500 did sell off at the open. We did come into the 4228 demand zone. This was at the same time NASDAQ was rallying inside of supply. So I was feeling pretty bullish on this. I did take SPY calls at 946 above this high for a breakout off of demand once we put in a higher low, anticipating that we were going to rally and break all-time highs. Let me maximize this. So unfortunately, I got long SPY calls. The next minute, the market dumped, and I stopped out immediately. It was a quick minute trade. I lost about 18 cents on the premiums. Not a big deal. So at this point, the market does continue to sell off, and I was watching to play puts. However, I really didn't have valid confirmation. I really didn't have a good area or a good plan to play puts with solid risk, other than chasing a downside move. So I really wasn't interested, and I wanted more market generated information for me to put a valid trade on. So because we did slice through this demand and really buyers weren't showing up, and now NASDAQ, the tides changed, we were becoming very bearish. We actually created supply. I would remove this demand zone, and now the nearest one is the 4208 demand zone. The market did pull back, and we consolidated at this point. It was getting very tight. It was getting very annoying seeing the market go up, down with very low momentum and very low volume. So at this point, you really have to sit on your hands. You all know how much I stress that waiting for the best opportunity, whether it be in the first 10 minutes, whether it be after 2 hours of the market open, wait for your setups to trigger, wait for your edge to be present, and wait for the market to give you the clear-cut signs to take a trade where you respect your risk and you follow your plan. So at 11:14, this is actually the time that I got in S&P 500 puts. Called this the barcode pattern. Once we get below the balance area and the lows at 4217, it should be good play to play puts, SPY puts targeting pre-market lows. The reason for this was the market was extremely balanced after we did drop, and the rule after balance is to play the opposition once we break out of it. So we had lows at 4217 that the market aggressively, randomly started to sell off at. And as soon as we got below the lows at 4217, I got the puts at the bottom of this candle. I guess we could argue that it was a chase because my risk to reward was a little skewed if my first target was pre-market lows and my second target would have been demand. However, I did get SPY puts, the 421 puts at 98 cents at this point. My stop was a little wide. My stop would have been above 4222, 4223, essentially the middle of this balance area. But then the market started consolidating below the lows at the 4217 area. I was pretty confident that we are below this downtrend line. That was another confirmation. And then we started aggressively selling off. We eventually got below those pre-market lows, showed no signs of buying. In fact, there was heavy volume coming into the market. I was pretty confident with this trade. And as soon as we came into demand, I didn't give this any room to bounce. I didn't give this any room for more continuation to the downside. I got out at 11.21 at $1.48, so about 50 cents on a 98-cent contract, which is a little over 50%. Not going to complain about that. If the trade, let's just say, cost you $988, you could have made $500 off of a $1,000 position. So we did come into demand. At this point, I really wasn't interested. You could see my commentary throughout the day. This worked out very well. Pre-market lows, quick 5 points. A break of the lows should fuel it into demand. Demand reach, quick trade. It happens fast. Perfect example of how a slow morning could turn into a fast and nice trade. It's all about patience. So at this point, I'm not too interested in playing calls just due to the context and due to the sentiment of buyers being pretty weak and sellers putting some pressure, especially at all-time highs. But we did get volume. Invest Trade members know how much I love to see volume. Then the market proceeded to bounce. We consolidated after we bounced. More volume came into the market. And I was giving myself, for those who were long, even though I was not in this position. I know some people in the chat room did take this long. A good area to scale was the 4226 area, because I knew a bunch of late longs would have chased a move above this. So that was a good area to scale. Then the market just consolidated for all afternoon. At this point, if you're watching tick for tick, if you're watching the market thinking it's going to break out, it's best for you to just sit on your hands and wait for momentum and wait for clean action like we saw earlier in the day to come in. A break above 4230, 4232 would have fueled the move into all-time highs. Unfortunately, we just consolidated, really didn't move, and end of the day, we ended pretty flat. Going back to Monday, here we have NVIDIA, that when the NASDAQ came into demand and started bouncing, NVIDIA also hit demand and started bouncing after consistently getting beat up all morning. This was making lower highs. This was also making lower lows. And as soon as we come into demand, volume starts picking up, kind of something similar to what we saw in the first 15 minutes of the market open, which is a very good sign. And then as soon as we break that downtrend line and bounce out of demand, this thing continuously makes higher highs, the trend switch, and we start making higher lows for a nice about 15-point rally going into the close. Now going back to Tuesday, today's action, here is the NASDAQ where it showed strength compared to the S&P 500. In the morning, rallied inside of supply. We did have that bullish bias. Keep this in mind when we go over the Apple trade. However, we did sell off. This is at the time the Apple trade was coming down. Keep that in mind as well. We had demand at 13846. That really showed no signs of buying. This was when ES was selling off as well. And at the same time the S&P came into demand, NASDAQ came into this very, very crucial 13758 demand zone. I know a few members did play the QQQ calls, especially with nice volume coming into at demand. And just like NVIDIA yesterday, the tide switched, trend started reversing and switching to a bullish side, and we did get a nice rally. However, now we are below demand. This becomes invalid. The next trade's on Apple. This is one where I made money off of it. The plan worked out well. However, I really wasn't too happy with the execution backing it, because this could have easily reversed on me. However, let's go over the plan. We had supply at 126.36. We were opening up inside of it. Wasn't too interested in the short side. Keep in mind the context of the market. I was extremely bullish. So I was going to use the supply zone more as an area to gauge how well buyers are doing and how they're feeling. If we slice through the supply zone, I'm only going to focus on longs and play calls as we have minimal supply once we are above 128 into 130. So Apple opened up just like NASDAQ, continued to rally, nice strong move, decent volume coming into the market. And as soon as we broke above supply, as soon as we broke above resistance, saw nice volume come into the market, The NASDAQ was rallying as well, and this was showing relative strength compared to the S&P 500. So I had a bunch of different confirmations. At 9:40, I played the 128 calls at 95 cents. My stop for this trade was below 127.40, 127.30 area with a target of 128 and then another target at 130. Now keep in mind, I haven't really traded Apple in a little while due to the balancing conditions. So this was kind of one of the first days, first weeks that we saw some nice buying come into this. So I'm long up here at 95 cents. The trade starts working out right away in my favor. We start getting a nice bullish candle to the upside, nice aggressive move, and then we get a strong push into resistance. And this is something I normally don't do in this current market, but I scaled out half of my position here just to protect myself. You all know I don't like chasing an extended move to the upside without a valid pullback or without valid demand forming. So that kind of goes against my execution backing this trade. So I wanted to take some profits off the table when I had them. And at 9:45, I got out at $1.26, half of my position. And I really wanted this thing to rally all the way up into 130. That was my next target. However, I knew we were going to have a pullback as this thing cannot go straight up. Now at this point, the S&P 500 starts turning over. And then this is where I actually played SPY calls. So I was in both trades at the same point. I got out of that SPY trade in a 1-minute period. That was kind of irrelevant. However, SPY was really rolling over and NASDAQ was creating supply at this point. So I personally was feeling attacked. I felt like my position wasn't going to work out and the chances of us rallying up into 130 became slimmer. So at 9:50, when this thing came to about where I got in, I exited my full position at $1.01, pretty close to the remaining contracts where I bought them at. So execution on this trade wasn't that good. I'm happy I got out where I did for my second scale because the market came down and then just chopped for the rest of the day. So it did work out according to plan. I know there were some members that, made 4 figures on this trade. Nice setup, nice trade if you did take your profits. We didn't get the juice like we wanted to. However, we were reactive enough and able to tell based on the conditions what to do and what not to do based on the execution of the trade. I think I'm going to wrap the video up here. If you enjoyed it or learned something from it, if you could just smash that like button, I'd really appreciate it. Follow me on Instagram, comment any questions you have, and if you really want to learn more, I definitely recommend checking out the course that I offer. It's very in-depth, it's very educational, and it comes with access to the Discord at no extra cost. I will be adding videos by the end of this week to it, and prices will never be this low again. So besides that, peace out.